As you mentioned, when everybody said, that's it, the party's over, it's the end of the bull market, we can all go away, the market did exactly what we suggested, which was come up. And this was exactly to do, and I think you should show tee up that chart in a bit, the one we looked at this morning, you and I, which is the US liquidity chart. I mean, it's perfect. So that seems to be playing out as expected. The liquidity flow is happening. It's all on track for what we expect. I still think crypto will outperform tech stocks at the next phase of the cycle.
Bitcoin just suffered one of its ugliest shakeouts in months. In a matter of minutes, nearly $400 million in leveraged long positions were wiped out as Bitcoin crashed below $75,000, triggering panic across the crypto market. Social media exploded with calls that the bull market was officially dead. Retail traders dumped positions, analysts warned of bearish market structure, and fears surrounding rising geopolitical tensions between the United States and Iran added even more uncertainty to an already fragile market. For many investors, this feels like the moment the entire crypto narrative is finally breaking apart. According to Real Vision CEO Raoul Pal, what we're witnessing right now is not the end of the crypto cycle, but the setup for the next major phase higher. Even as many respected voices argue that Bitcoin's explosive upside days are gone forever, Pal believes the biggest acceleration period for crypto, AI, tech, and global liquidity may still be directly ahead. What makes this even more important is that Pal isn't just talking about Bitcoin. He believes massive geopolitical negotiations, AI dominance, energy markets, stablecoins, Federal Reserve policy, and global liquidity are all converging into one giant macro transition that could reshape financial markets over the next several years. In his view, this isn't just another crypto cycle. It's a complete restructuring of the global system happening in real time, and most people still don't fully understand what they're looking at. So in this video, we're going to break down Raoul Pal's latest explosive predictions, why he believes crypto could massively outperform once again, what he says is happening behind the scenes between the United States and China, and why this recent crash may actually be setting the stage for something much bigger. Make sure to smash the like button, subscribe to the channel, turn on post notifications, and let's get straight into it.
Quite a lot going on, so I think we'll whiz through quite a few bits and pieces. From my perspective, some of the things that I've been focusing on the broader picture are what's going on. I've had this whole thesis around this universal code that everything is funneling from energy into intelligence. And it's driving the geopolitical process, it's driving the investment process, it's driving literally everything right now. And what we're getting into is this funnel moment where this Trump administration, which was basically chosen by the accelerationists, if you remember, is backed by the crypto lobby and by all of the Democrats who used to be, all of the tech overlords who used to be Democrats, all flipped because they all knew that this chance was the chance, because we're going to, by the time we get to the change of administration, we will have AGI, we will have crypto everywhere, all of this stuff. So it's been hurtling towards this. Now we're getting to the summer where everything has to resolve. Everything has to resolve for Trump for the midterms. Because again, if I divided by E continues to play out, i.e. intelligence needs to accelerate, then it really has to have the Republicans winning the midterms. It's not necessary, but it's highly the most efficient path for this to happen. So it feels that all obstacles clear out the way. Now, I'm not sure people realize, even the governments realize that this is what they're doing, but this is what they're doing. Trump is getting the Clarity Act across the line as we speak. I said that was going to happen because it had to happen, because the crypto lobby and what needs to happen before the midterms. We will see similar with AI, because that's going to come too. We have now got the change of Warsh. He's been voted in. Warsh is the Greenspan appointment of the 1950s appointment. He's going to run it hot. We will have financial repression, and they will let productivity take the sting out of CPI and keep core CPI lower. That's what they're going to do. That's what Warsh's in place. He's the tech accelerationist. He's a crypto guy. He's a prolific tech investor. He understands the game. Productivity is the game. Trump, in the meantime, is with Elon, Jensen, and about 100 others of all of the tech leaders in the United States have all gone to China. And Julian and I have talked for a long time about a grand bargain that's coming. And we think this is the stage of the grand bargain. Iran, Venezuela is all part of the same picture, which is get the cost of energy lower, get the Chinese, the Japanese, the South Koreans to own as much of the long bonds as possible. The ESLR takes care of the short end, plus stablecoins too, which is why stablecoins was so important, because it finances the deficit. Trump's going to negotiate here with the Chinese, maybe to give them a lower dollar. In exchange, they will buy the long end. There'll be some kind of agreements on trade, some agreements on who gets what technology. That's why Jensen's there. There's going to be some agreement over access to Nvidia. This is to avoid going to war over Taiwan, which nobody can do because it slows down the intelligence side because all of the chip fabs are there. So there has to be a splitting up of the two regions into the US and China, the only two people who can compete in the AI race. That is what is going on in this negotiation, in my belief. The weaker dollar is another part. The UAE being given swap lines, Bessent going to South Korea and Japan. He's basically saying, the euro-dollar system that lends to China is out of those countries, and he's basically going to offer the Chinese liquidity. And the Chinese liquidity will flow through to the system in the same way that we expect global liquidity to come through. It allows the dollar to weaken, which weakens financial conditions. It will allow oil price to come down because there's going to be agreements on Iran. At the end of this, we have Venezuela wrapped in as well. This is a very big setup happening, and it all has to get done and agreed and see things happening over the summer because the election's coming up. So it's a crucial time, and it seems to be playing out in the business cycle markets charts. It's all corroborating this.
Buy $10,000 of Bitcoin on a regular exchange. It grows to $60,000. That $50,000 profit? You could owe $10,000 or more in capital gains tax. Now do the same trade inside a Roth IRA with iTrustCapital. That growth? Tax-free. You keep the full $50,000. Same crypto. Completely different outcome. iTrustCapital lets you hold crypto in a self-directed IRA, trade 24/7, and secure your assets with institutional-grade custody. You can also hold gold, silver, and stake certain assets. Real U.S. customer support. $100 bonus when you fund through the link below. In crypto, structure beats timing. Every time. What Raoul Pal is ultimately describing here is a world rapidly reorganizing itself around liquidity, artificial intelligence, productivity growth, and technological acceleration. In his view, governments, central banks, major corporations, and global investors are all being pushed toward the same destination, whether they fully realize it or not. That's why Pal believes policies supporting crypto adoption, AI expansion, lower energy costs, and easier financial conditions are not random events. They are all connected pieces of a much larger transition already underway. And if his thesis is correct, the implications for risk assets could be enormous. But Pal's analysis doesn't stop with macro theory. He then shifts directly into the charts, liquidity flows, and specific market setups he believes are confirming this entire thesis in real time. From Bitcoin and crypto to tech stocks, semiconductors, AI infrastructure, and even space-related companies, Pal explains why he believes many of these assets could be entering another major acceleration phase, despite all the fear currently dominating the market.
We said here that this was going to reverse because of the liquidity flows came back. And me did that reverse, as you said. I mean, that was historic, like this one was as well. I mean, there is no stopping this. Every time you have a correction, and people were yelling at us saying it was all over, and then that happened. But, we've had the same thing I'll come back to stocks in a sec, but as you mentioned, when everybody said, that's it, the party's over, it's the end of the bull market, we can all go away, the market did exactly what we suggested, which was come up. And this was exactly to do, and I think you should show tee up that chart in a bit, the one we looked at this morning, you and I, which is the US liquidity chart. I mean, it's perfect. So, that seems to be playing out as expected. The liquidity flow is happening. It's all on track for what we expect. I still think crypto will outperform tech stocks at the next phase of the cycle. So I think that's pretty good. I won't go through most of these. The other chart I'm very closely following is Zcash, which has been a great one. And I think somewhere here, we're going to be doing another one of these kind of inverse head and shoulders continuation patterns. It comes down, breaks through, next phase of acceleration. So I kind of like that one as well. Going back to stocks, as you said, I mean, Tesla's now, let's look at the weekly to give it some perspective. I mean, this wedge is going to break.
Yeah.
And when this wedge breaks, nobody's really prepared for this. And I still think fundamentally it's amazing. Rocket Labs has been rocket ship. And look, I get this is a very overvalued stock versus its revenues. But before the SpaceX IPO, the only way of playing the SpaceX IPO is owning this stock. And if I look at this rising wedge, if it breaks the top of this, which it looks like it's going to do, it's just going to go vertical for a while. And then I think we'll take profits into that because, it's not making a lot of revenue right now. It's still losing money, everything else, I get it. And the SpaceX IPO will satiate the demand for, space stocks. But this is the play. And I think it's going to go vertical. Obviously, Nvidia exploding again. It helps. Jensen's in China. Clearly, he's going to be allowed to sell Nvidia chips to China. On what terms? We don't know.
And when you look at this chart, I mean, assuming that we're right, assuming the compute cycle article's right, I mean, the move has just started.
It's just one of the wildest charts in history.
I mean, wow. I mean, had you bought that back in 2012?
Yeah.
What a move.
Then, Intel has been doing, that chart was la la land as well. Oracle, I think everyone's going to be wrong on Oracle. Oracle's probably going to go back to the new all-time highs. Semis, you showed TAN, Circle, good. HIMS still really like this stock. I think people are still wildly underestimating the size of the market in personalized medicine and these compounding clinics and the technology that they've got and the sheer size of the peptides market. It came down on earnings. I think it finds a base somewhere here. And as it goes through, we'll form an inverse head and shoulders and this thing's going to be exploding higher. So I really like HIMS as well. eToro, we don't have, but we had Yonias on recently. Lovely inverse head and shoulders low. I mean, interestingly, they had great earnings in the same quarter that Robinhood and Coinbase didn't. They got $1.5 billion of cash. It's like a third of their entire market cap is cash they're sitting on. So it's a wildly undervalued stock. So I kind of like that. DXY, not doing a lot. I think we need to get through the China situation, get some outcome. And it won't happen immediately, but over time, we still think that the dollar goes lower or at least doesn't go anywhere important. So nobody has to worry about the dollar. I mean, there's a chance that it comes back down to here, If that happens, then, this really is going to be a very, very big bull market.
Yeah, absolutely.
So we'll wait to see on that. Rates we looked at, rates are kind of not very happy right now. I think this is going to end up being a false break and will break back down again for the reasons we've talked about. But we need to watch it. If it starts breaking up here, you want to start considering, what the reaction function is. Remember the friend of ours quote, it's not trading the thing, it's trading the reaction to the thing. You don't short rates, it's what they do if rates get high. That's an easier trade and more profitable. So I think that gets interesting. Oil has been, let's go to the daily chart, around for a bit.
We erased the 9 count, which is slightly annoying. But nevertheless, I'm not sure what the latest counts are.
No, but we kind of know that they have to get a solution. Right?
No, I agree.
Because of the election, because of the universal code. So I'm just patiently saying it will come.
What makes Raoul Pal's framework so compelling right now is that it doesn't rely on short-term headlines alone. Most investors are trapped reacting emotionally to daily price action. One day it's geopolitical fears, the next day it's the Fed, then it's liquidation cascades or recession concerns. But Pal is attempting to zoom out and identify the larger forces driving everything underneath the surface. Liquidity expansion, technological disruption, AI competition, weakening currencies, stablecoin growth, and government incentives are all colliding at the same time. And historically, periods of massive systemic change have also created the largest wealth creation opportunities. At the same time, this environment is becoming increasingly difficult for average investors emotionally. Every correction now feels apocalyptic because crypto markets have matured compared to previous cycles. The euphoric vertical moves people became used to in 2017, or even parts of 2021, are no longer as simple or predictable. Markets are more institutional, more macro-driven, and far more sensitive to global liquidity conditions. That's why violent shakeouts like the recent Bitcoin crash below $75,000 create so much fear. But Pal's argument is that these corrections are exactly what happens inside larger structural bull markets, especially when leverage gets overheated. Another major takeaway from this discussion is that the next phase of the market may not look identical to previous crypto cycles. Instead of pure speculative mania, capital could increasingly flow towards sectors tied directly to AI infrastructure, semiconductors, blockchain adoption, stablecoins, tokenization, robotics, energy optimization, and exponential computing growth. In other words, the lines between crypto, technology, finance, and geopolitics are starting to disappear. Investors who continue viewing Bitcoin or crypto as isolated assets may completely miss the much bigger picture unfolding globally. And perhaps the most important point of all is timing. Pal repeatedly emphasizes that many of these developments need to accelerate over the coming months as political pressure, elections, AI competition, and economic restructuring intensify. If global liquidity truly continues expanding while rates eventually stabilize and the dollar weakens further, risk assets could enter an environment far more explosive than most people currently expect. Of course, volatility will remain brutal. Corrections will continue shaking people out, but historically, the strongest trends are often the hardest to emotionally hold during moments of maximum fear. If you enjoyed this video, make sure to like, subscribe, and turn on post notifications so you never miss our latest market breakdowns and crypto analysis. Thanks for watching, and we'll see you in the next one.